This YouTuber says this scalping strategy can pass any prop firm challenge, and that is quite a tall order. So I decided to backtest it to see if it can actually pass a prop firm challenge. Can it? Let's find out. My name is Eddy Pips, and I'm on a mission to test mechanical trading strategies to see if they truly stand up to the prop firm challenge. Here's how it works. I find a trading channel on YouTube. I pick one of their many strategies. I backtest it trade by trade using FXReplay. I track wins, losses, max drawdown, and whether it hits the prop firm's rules. My goal is to help you find a trading strategy worth backtesting, while also exposing a few gurus on the way. If a strategy passes a prop firm challenge, that indicates to me that it is worth backtesting. And typically what I would like to do is eventually backtest these trading strategies 100 times to see how they truly stand up in 2025. Before we get started, if you're serious about trading but uncertain about which prop firm to trust, here's the truth. Hola Prime is backed by NBA All-Star Karl Anthony Towns. They're the first to process payouts in as fast as 1 hour. They're the first to offer one-on-one coaching, and also the first to publish price transparency reports. They have simple, fair funding programs, and you can trade Forex, futures, or crypto with affordable account options and up to 95% profit splits. And if you're ready to start, click on the link in the description and use code EDDY30 for 30% off any challenge account. Let's dive in. As always, I'll leave a link to the original video in the description. I won't go over the exact rules, but I will give you an overview of the strategy right before we dive into the analytics. The specific pair that he was testing or showing trade results for was NQ, or could be US 100 or NAS 100. The time frame that he was executing his trades on were the 5-minute time frame, and the execution sessions he was using were London and New York. There are 3 steps. Step 1, session liquidity sweep. He highlights 3 sessions and uses the highs and lows of these sessions to be rated before looking for a reversal in the opposite direction. The timings he uses for these sessions are as follows. Asia, 1800 to midnight, and this is UTC -4. London is midnight to 6 a.m. New York is 6 a.m. to noon. These session timings actually come from a popularized framework by Trader Day called quarterly theory, where time is divided into quarters: yearly, weekly, and daily. The daily quarters are what he uses as his session liquidity. The best way to find your session liquidity and draw it up on your chart is you can do a couple of things. One, you can use your vertical lines here. If you come up to your drawing tools, you can mark vertical lines at your Asia session from 1800 to midnight, and your London and your New York, or you can come up here to indicators and you can search sessions. And you can put any of these sessions indicators, for example, sessions on charts by Forex. You can come into the settings and you can adjust your settings for the session timings as needed, and you can draw out your highs and lows. I have my own personal indicator that I use that plots out the highs and lows for me. Boop. So during the London session, which is right here, he is looking for a sweep of either the low or the high of Asia, and during the New York session, which is right here, he is looking for a sweep of the low or the high of London session. Step 2 is fair value gap inversion. Once the session liquidity has been taken, we are looking for a fair value gap to be inverted. So if price takes out the low, like it did here, we are looking for a bearish fair value gap to be inverted and for a bullish candle to close through it. So here we have our bearish fair value gap, and we are looking for a bullish candle to close through it, inverting this fair value gap. And here you can see we close above that fair value gap, creating an inverted fair value gap. He says there are 2 ways to enter. You can enter immediately after the candle closes above that inverted fair value gap, or you can enter at the retest. Your stop loss is going to go at the body of the lowest candle of the leg that closed above that fair value gap. We target 2.5. So again, we have step 1, which is session liquidity sweep. We have the London low taken out here. We are looking for a fair value gap inversion. So we have a bearish fair value gap here that gets inverted by this bullish candle here closing through it. And our entry is going to be at the retest of that inverted fair value gap. Stop loss is going to be at the body of the low candle that of the leg that closed above that fair value gap. We're going to play this out, and there you can see we hit our 2.5R. For backtesting, as always, I will be using FXReplay, where you can get 15% off by clicking the link in my description. And I will also use Edge Finder, which I have developed using Gemini build. The prop firm rules I will be following are the rules for the one-step prime from Hola Prime, because of the low requirement of 6% profit target and a trailing drawdown of 3%, which is our account cannot go below 3% of our initial balance. We are selecting the one-step prime challenge because this is the futures. And for Forex, Hola Prime has a wide variety of choices for you to choose from. And you can get 30% off all challenge accounts using code Eddy30 or clicking the link in the description. For this prop firm challenge, since the profit target is only 6% and we only have the trailing drawdown of 3%, we're only going to risk 0.5% per trade. And we have passed, guys. We're going to take a look at the performance overview, all the analytics, profit, drawdown, total trades, etc. So the net profit was 6.5%. Our goal for the challenge was 6% without breaking any of the rules. The win rate was a great 41% win rate with a 2.5 risk to reward ratio. That is absolutely amazing. Profit factor of 1.76. Max drawdown was actually only 2%, which was pretty damn amazing. There were only 29 trades, 12 wins and 17 losses. I do want to backtest this further. Let me know in the comments if you want to see a backtest maybe for a couple more months, because this only took about a month and a half, which was pretty awesome. As you can see here, the average loss to average RR, total losses were only 17. You can take a look at our equity curve here. We actually only lost a couple of trades here, bringing our account into drawdown, and you can actually see that we quickly climbed up and keep a nice steady pace upwards. That 2.5 risk to reward ratio is really, really nice. And with the 41% win rate, that's quite nice. Let's take a look at the risk to reward simulator to see what the best risk to reward would have been. We can see here the current R was 2.5 with a win rate of 41% and profit of 1,300. Let's see what would have been better. A 1.5 risk to reward ratio would have been really nice with the 52% win rate and an $850 profit. That would have been really nice. Just a 2% risk to reward ratio would have yielded a little bit of a higher accuracy with almost only $300 less, which I think is worth it, considering that 4% extra win rate will really help with the psychology of you as a trader. And here you can see our winners and losers. The max consecutive wins in a row was 4, and it also had 4 losses in a row. Let's go through our time-based breakdowns, our daily performance breakdown. So it looks like Monday was the worst day with 4 trades and a 0% win rate, yielding only losses on Mondays. So if we would have eliminated Mondays, what would that have looked like? 48% win rate and a total of $2,000 without trading Mondays. So that's why I added this to my Edge Finder, so that I can see the daily performance breakdown. And here you can also see that I can choose specific days, and it'll give me the win rate, total trades, and the P&L for those days selected. Same thing here with the session performance breakdown. You can see London and New York were actually quite equal. Both yielded the same amount of dollar profit, and the win rate was 39% in London and 45% in New York. So if you would have only traded New York, you would have yielded a 45% win rate, but only $812 gain. Let's take a look at the performance calendar here. You can see January, there were so many trades, it's not even funny. I think this is the most trades that we've had backtesting a strategy. Yeah, it definitely is. But here you can see January trades, and then you can see the February trades. There were some days where there were 2 trades in a single day because London session and New York. Now, the only thing about this strategy is, of course, in order to get these results, somebody has to literally be awake to trade London session and New York session to get these results. That's the only caveat. Let's take a look at the trade log here. You can see all of the wins and the losses here. We're going to go over a loss. As you can see here, we had our Asia high during London session. We had that Asia high taken out. We had our fair value gap right here. We got an inversion of that fair value gap here with this red candle closing through it. And then we go ahead and we enter at the retest. Stop loss would be at the body high, and that one was a loss. Same thing here. Another loss. We have London high here. During New York session, we took out London high. We have a fair value gap here that was inverted with this candle here. Closing through it, we enter at the retest of that inverted fair value gap. Stop loss at the body high, and that one was a loss. Let's take a look at a win. You can see here we had London low. We had New York during New York session. We took out London low liquidity. We had a fair value gap right here, and we had a bullish candle close through it, creating an inverted fair value gap. We enter at the retest, and you can see here the stop loss was at the body low, and we hit take profit for a 2.5 reward. Let's go over another win. Here you can see Asia high was taken out during London session. We come up, we have a fair value gap right here. Price closes through that fair value gap with this red candle right here, creating an inverted fair value gap. We enter at the retest, and you can see here 2.5 risk to reward ratio hit. Let's go over another win, one more win. We have Asia high here. Let's zoom in a little bit. We have Asia high here during London session. Price comes in, it takes it out. We come up. We have a we have a fair value gap right here. Price closes below that fair value gap with this red candle here. Stop loss at the body. You can't really tell here, but the wick does come up. It retests, and the next candle completely gives us our 2.5 risk reward ratio, which was awesome. I really did like this strategy. I really do want to test it a lot more than just the 29 trades, but this can pass a prop firm challenge, and it did it in January, which is one of the worst months of backtesting data that I have. So would I trade this strategy? Yes. Could we make it better, or is there anything that I can suggest to improve this? No. The only thing to kind of elaborate on is pick a session that you want to trade. Just in the data set that I have, you can see that New York performed a little bit better, but it did have less trades. But this strategy was actually really easy. It was very mechanical. The only thing that was subjective was the stop loss placement. He says that you place it at the body of the candle that started the leg that closed through the fair value gap. So it's a little bit subjective. But other than that, I think this strategy is really easy for anybody to follow. I think you should try it out. If you backtest it and you get some results, please share them in the comments below, and enjoy the rest of your day. And thank you so much, guys, for all of the support that you have been giving me. Soon I will be doing a giveaway. Let me know what you would like to see me give away. Take care, and I'll see you in the next one, guys.